If you buy Tesla today, you're buying an auto company and an energy company with a call option on autonomy and a call option on robots. In my opinion, it's not really built in. Now, some people may argue that Tesla wouldn't trade at 60 times earnings if it wasn't built in to some degree. But my modeling showed that energy and autos support the valuation over time as those businesses grow.
So do you think Tesla is just an auto company? Well, if you're looking at revenues today, then the answer is yes. 95% of Tesla's value comes from autos. But Elon has said that Tesla should really be thought of as roughly a dozen technology startups. Our guest today did the work to value 5 of Tesla's internal startups: Supercharging, autonomous vehicles, bots, Autobidder, and Distributed Inference Computing. He's built financial models for each of these startup businesses. His conclusion? 2 of these 5 startups could account for 92% of Tesla's $34 trillion valuation by 2030, plus or minus a few years, and plus or minus a few trillion. Cern is a certified financial accountant who at one time managed a growth stock mutual fund. He was able to get that fund's performance to rank at the top 2% of all funds. He's been running his own investment advisory firm called Brilliant Advice for 20 years, providing wealth management services. Thank you so much, Cern. I appreciate you joining me yet again. We did a video in the past. You showed clear financial models for 2 of the major businesses. Now you've expanded it to more. Thank you for joining me.
Thank you, Herbert. It's great to be back.
So one of the big questions that everybody's asking, is Tesla just an auto company? And we all, many of us long-term investors, see it as multiple startups. And the problem is that no one's really modeled it out yet. I mean, many of us have, but not to the detail that you have, to really give it some grounded kind of projections. And what you told me just now is that you've been very conservative about this. So that really is a good way to approach it. So tell me more about when do we think that Tesla is going to be seen and understood to be way more than than an auto company?
Yes, well, whenever somebody puts out a $34 trillion valuation number, it's unlikely anybody's going to think that person is conservative. But as we get to the details, maybe we'll see some of that. But certainly today, Tesla is an auto company. It derives about 90% of its revenues from the auto business. That said, the company is quickly going to transition into something else and then something else again. And I think by 2030, we're going to see Tesla be a company that looks nothing like an auto company at that point, if not sooner.
Exactly. And what you've done is put together some slides to show us how the company morphs into different kinds of businesses as we move along. Let's take a look at that. I love these slides you put together. This one will take a little bit of a explanation for us to understand it. So let's take a look at this.
Sure. Yeah. What I've tried to do in this chart is show as a percentage of the company's total potential business value at different points in time. So in the middle of the page is 2023, 2024. And you can see today that about 90%, maybe 85% of the company would be valued as an auto company. Yeah. The light blue line is the energy storage business, which is beginning to grow. The purple line is supercharging, which is also beginning to grow quite nicely. And then we have some other businesses. And then depending on the time frame, depending on when autonomy comes in, and depending on when humanoid robots start to be produced, either one of those would quickly change the nature of the company. And by 2030, the company would no longer look like an auto company. A small percentage of the revenue would be in autos and energy, and about over 90% would be basically an AI-powered robot company, with the robots either on wheels, as in the vehicles, or robots with feet, as in the humanoid robots.
Okay. So I love this chart. Okay, so it took me a while to just kind of digest what you're saying here, but it makes sense now. This is not revenue. This is the percentage of the Tesla, of what percentage of their value is attributable to these 5 or 6, and there's even more business that's going to come. So right now, like you said, 90% of the company is going to be seen as an auto company. But by 2025, you'll see here that the auto company revenue as compared to the other businesses starts to fall, such that by 2026, this is huge. This is crazy. We're talking 2 years from now, that your potential, if everything works out right, the auto business will only represent maybe 10% of Tesla's business. And then what you did here was, it took me a while to figure this out, but the red and the blue together is the autonomous company, and the red is robots, and the blue, sorry, the red is autonomous cars, robotaxi, and the blue is robots. And it takes them a little bit longer for that to come to fruition. But if this all comes together, then by seriously 2030, like you said, just the auto car business is just because of the revenue coming in from the others would be so much. Got it. Okay. Love it.
It may seem hard to believe. The important thing I think to say here too, the red and the blue, the humanoid robots actually may happen before the robotaxi fleet is up in operation, given regulatory issues and other challenges. There's not as many challenges to getting the humanoid robot business up and running besides the technology side of it. If that is solved, if the robots are able to be functional and useful, then that business can scale very quickly.
Okay. Let's take a look at this next slide here, which is a little bit more traditional. Oops, sorry. There we go.
Yes. So what we're looking at here is just isolating on the auto side of the business, energy storage, supercharging, and Autobidder. These are the four main businesses of Tesla today. And if we just look at these from now till 2030, this is again looking at the potential business value. This is not revenue, but this is a potential business value. So this is taking the potential earnings of each of these businesses and applying a multiple to those earnings, and then adding them up to get to the total potential business value. So the auto business today, by my estimates, is valued at about $750 billion.
Right.
And that would be about the same in 2030, even as the auto business continues to grow. The reason is that the auto business today has a high PE multiple, and in the future, that PE multiple would likely come down to a much lower number. So the overall value of the business, even though the number of vehicles sold goes up because the PE is coming down, the valuation is pretty flat on that business. Now, what you do see here is that Tesla actually becomes an energy company by 2030 just with these four businesses. Yes. Energy, both in terms of the energy storage, that has the potential to grow quite massively between now and 2030. And also the purple line, which is the supercharger business. Now that Tesla has basically become the de facto charging standard in North America and potentially eventually around the world, that business could grow quite nicely. And then thirdly, Autobidder is also tied to the energy business. That's an AI-powered software system that maximizes the use of the energy storage products that Tesla sells. And my model shows me that has some pretty incredible potential as well.
That's brilliant. Okay, so first comments on my side is I love it that you did this. Thank you for doing that. I've always wanted to know what percentage of the but at this point, if you take your, I think, conservative, you're saying the company will be worth $2.3 trillion by 2030, which is great.
That's correct, and that doesn't take much of a stretch to get there. That seems like a very, very achievable target.
So I will obviously debate you on this, because obviously saying that, we're now at $700 billion for the auto company, that by 2030 we'll still be at $700 billion. I've heard, 3 to 4 times, despite the fact that you said the PE ratio goes down, the margins go up, but you haven't put in licensing. You haven't, I think you said you use the same numbers as Gary Black, which is 10 million cars by 2030, which I don't believe it's going to be 10. I think it's going to be double this, but okay. That's what I mean by your conservative there, right? The other thing I heard was that Supercharger, which is interesting here, that purple line, I heard that by 2030, the calculations I saw was that it's going to be equivalent to what we have now in terms of, and so if you are a how come it says, this is 2020. Yeah. So here, by 2022 today, we're at $700 billion market cap. That this length here, that amount should be the same here, but you got a tiny here, which I understand to be the same by that point.
Yeah, and I built a model for the supercharger business that is tied to the growth of the auto business. I used Gary Black's numbers, projections from now to 2030 for both sets of businesses. Now, what the supercharger business does not include is the additional vehicles from other OEMs coming onto the network.
See? Okay. There you go.
Right.
Okay.
Yeah.
Conservative. All right.
Yes.
That's still pretty cool that if you do this, here's the 5 businesses. Okay.
That's right.
These are not the 5 businesses. Sorry. This is autos, energy, supercharging, and Autobidder, which is just a sample of them. I don't know
That's
why
right.
this is happening, Cern. Do you notice this? I get when I do this,
Yes.
I get my thumbs, and then for some reason I got those.
That's
How do
great.
I turn that? How do I turn that off? Okay. Sorry, guys. All right. What are we looking at here?
You'll want the balloons for this one, because if either one of the robotaxi businesses becomes an operation at some point between now and 2030, and I've modeled out that it starts 2025 and beyond, 2026 for the robots.
Yeah.
If either one of those happens for Tesla, the valuation potential is absolutely enormous, and I can very easily get to a 20, 30, 40 trillion dollar valuation on the backs of those two businesses. Each one of them is a 10 to 20 trillion dollar opportunity.
Okay.
And it makes the other businesses from the previous chart look like a flat line.
Beautiful. Okay. So you and I have done, and people, folks, if you are interested, I've done a deep dive interview of Cern. Go look for that video, because in that video, we went in detail, a financial model for these two businesses. The red is robotaxi and the blue is bots. He's created a financial model with a lot of assumptions. And so you yourself can play around with assumptions and probabilities. But the point here is that, yeah, if those two businesses succeed, forget the auto business, which is what we're banking on today. It becomes such a tiny part of the business. Okay, that's just the point. It really is so big. And then that's ridiculous. $30 trillion is possibly achieved. Yeah.
Yes, without crazy assumptions. If you go to the next slide, it shows the transition from essentially where we are now, pretty much the beginning of 2024. The auto company represents 80+% of the business value. And over time, again, if either the robotaxi business or the bots, become a business for Tesla, that the auto business quickly diminishes. By 2030, energy and autos is about the same. But the vast majority of the company would be an AI-powered robot company. So that's what I built these models to take a look and see, how this is achieved. And I wanted to back this up with some good data.
Yeah, sounds good. Again, this is the percentage of total business value. So you kind of have to see that, yeah, auto's still going to be massive. It's just that compared to the others, it's comparatively smaller.
That's right.
This is my favorite chart. I appreciate this because what you're saying here is all these different potential businesses that Tesla has, sources of revenue. And what you've done, and what we're going to talk about today, is these 5, which is, you called it Electra. I love your names, and you'll explain why you came up with these acronyms. But Autobidder for energy, people don't talk about it, but it's going to be a massive business. Volts, which is a supercharger network. Cern, which is your robotaxi, and then bots, which is your bot model. And then these two together is this concept of distributed inference compute, which is not Dojo as a service, but this is with all the chips that are in the bots or in the electric vehicles. And, you can actually charge for this access to those chips above and beyond Dojo. So your point is that, okay, you're going to look at these 5, we're going to dive deep, but there's other revenues available as well that we haven't even looked into.
That's right. And there are lots of other potential revenue streams, and some of them could be quite large. Certainly licensing part of Tesla's platform to other automakers, licensing part of Tesla's humanoid robot platform to other robot makers is possible, plus all the software that's in everything, the cars, the bots, the battery storage. There's lots of different revenue opportunities that Tesla can pursue.
And I just want to mention again, you and I had this conversation and I said, look, I love this, but you actually don't have AI, which could be bigger than all of this. And you don't have Dojo as a service, which could be, I don't know how big that is. I'd love you to do a deep dive on how big Dojo as a service could be. But those two are pretty big and you don't even include them yet.
Yeah, I got to 34 trillion and I said that may be enough for now. Right?
Gotcha.
Yeah. So the first thing then is just to take a look at the auto business. So in terms of where the auto business is today, this year the company will probably deliver about 1.8 million vehicles, roughly. Again, I'm using Gary Black's estimates for 2023 to 2030, and he has the auto business growing to about 10 million deliveries a year by 2030. Tesla's goal is 20 million. I believe Wall Street analysts are around maybe 6.5 million. So there is certainly upside to this model if Tesla can achieve its target of 20 million. You could basically double the $805 billion valuation in the right-hand column. But I assume that the net margins are 15% and the PE ratio in 2030 is only 15. So that's why as the business grows in terms of number of vehicles and profits, the valuation doesn't come down the valuation doesn't go up a whole lot because the PE ratio comes down from where it is today of about 60. So the 746 billion in valuation today, I think, is a PE ratio of about 61, 62. But over time, as that business gets more mature and larger, that PE ratio would likely come down. And that's a nod to the people today that say, well, Tesla's an auto company, it should be valued like an auto company. Well, yes, eventually that part of the business will be valued like an auto company, but that's once it hits a period where it's kind of hit its maximum growth. Once they produce 20 million vehicles a year, it's probably not going to grow much more than that. So at that point, the valuation doesn't go up.
Okay, love it. So obviously, I agree with the PE ratio being brought down to 15 by that point. I absolutely do not agree that it's only going to be 10 million by that point. I do not agree that it's 15% gross profit.
This is taking out FSD, by the way. This is not including FSD sales.
Okay, still, it's obviously cutting prices and anyways. Okay, so and then okay, good. So that's good. Okay, and I agree with you. And then of course this does not include robotaxi. This is just pure create, stamp, sell cars, because at some point Tesla may stop selling cars, and all this is just going to be sold as robotaxi business. But we'll see.
That's right.
We talked about that.
Potentially.
Okay.
Yep. And then energy. This is a chart from the presentation that Tesla made earlier this year, Investor Day, and they showed the energy business. We are here, and growth up and to the right. No numbers on this chart, but Tesla has talked about some pretty massive growth targets. If you go to the next slide, Herbert. This is a similar valuation table for the energy business. So today, I estimate that they'll sell or deploy about 16 gigawatts of storage this year, which would be a pretty massive growth over last year. But their target in 2030, I believe, is about 1 terawatt or 1,000 gigawatts. That's pretty significant growth. That would require about 25 Lathrop factories. Lathrop has the capacity to produce about 40 gigawatt hours of energy storage, and they would need to build about 25 of those between now and 2030. And I think we'll see a lot of those factories being placed in different parts of the world. I think a lot of the discussions that we see today with the likes of Indonesia, India, Turkey, and other countries are probably centered around a battery storage manufacturing plant. And then in terms of the value, same thing, we're using a high PE today, but I've got the PE in 2030 coming out to 20. I've got profit margins on this business only at 15. But the value, because we're growing the storage deployed so much, even though the PE ratio comes down, the value of this business goes up. And by 2030, the value of this energy business would be greater than the auto business if autos is only making 10 million vehicles. So energy has the potential to pass autos in terms of the size or the value to the company by 2030.
If they hit their targets. Yeah, this is a very, very aggressive. 25 megapack factories by 7 years seems pretty aggressive. That would mean, that's crazy, right? 7 years, 3 a year. And it only takes them 1 year to build a megapack factory. It's nothing fancy. It's pretty simple. It's like, I keep repeating this, but I've been told that the warehouse is really the size of a Target retail store. Mm-hmm. Empty inside, quick to build, takes them less than a year to build. But you need the battery. or you need to be able to create the batteries. So you need the minerals and all that. And that could be the rate limit stuff. But yeah, you're assuming that they're going to hit their pretty aggressive goal. So
Sure. To some, that sounds aggressive. Others have said that that's not so aggressive. It remains to be seen. We'll see. It's certainly an easier business for Tesla to scale than the auto business.
Sure. Very simple.
Yep.
All right. That's cool. I like this, but it's massive.
Okay? Yes.
This is combining side by side.
Yeah, both energy and autos. So I get to a $1.7 trillion valuation. If autos is twice as big as we imagined with 20 million deliveries instead of 10, then you get to about 2.5 trillion valuation just on these two businesses alone.
Just on these two businesses alone, it could already be 2.5 trillion. Yeah, I like it.
Or if energy is half of that, then maybe it's a couple of trillion. So in that ballpark.
So this is 5x where we're at now. Or 2.5 divided by 700 is 4x. Mm-hmm.
Right. And this is just on two existing businesses. There are some other existing businesses that will also grow, the Supercharger business and Autobidder. But this is just a chart that shows the ramp of energy versus autos, and how that it will grow over time and potentially surpass the auto business.
I like that you put this together. So if your estimates for energy is correct, which I think could be a little, again, I need to talk to more people, but if it's I think your ramp for auto is low, but your ramp for energy could be high. But you're saying here that by 2028, it could be equal.
Certainly possible. Yeah, and Elon has said that over time he thinks energy will be bigger than the auto business.
True.
So I don't know when that is. Maybe it's 15 years from now. I don't know.
Right.
Yeah. So we get to this notion of Tesla has a dozen internal startups. I essentially looked at 5 of them. Mm-hmm. Superchargers, Autobidder, Distributed Inference, autonomous vehicles, and humanoid robots. And I built models for all 5. On the previous show, we discussed the last 2, the autonomous vehicles and the humanoid robots. And today I'd like to go into a little bit more detail of the first 3, which I have not presented before.
Perfect. Appreciate that very much. Let's go one by one. Yeah.
So this is just a summary, taking energy and autos and comparing it to these 5 internal startups. By 2025, I see a potential for the internal startups to collectively be worth more than the energy and autos business. So $1 trillion valuation there for those versus around $1 trillion. So very quickly, depending on the ramp of 2 of them, it could very quickly surpass the value of the existing business today.
Dude.
And I think this is something that people are not really aware of.
No, I am not. Okay, this is shocker to me because you're saying 2025 and 2025, man. In how many days? 40 days. It's going to be 2024 already. Okay,
right.
So 2 years.
And part of it hinges upon when does the autonomous robotaxi network begin operation. So you could adjust it for that, and also the other key part. So it's either one of these, that the autonomous vehicles or the humanoid robots. When does Tesla start selling humanoid robots? Either one of those events causes an potential explosion to the value of the business. Wow. And I'll show that. I'll show that with the math and the models.
But I love that just the basic concept, which is maybe by 2025, 26, or 27, these other businesses, not energy and auto, could be equal to auto and energy. That is
equal, and then massively surpassing the existing businesses.
Exactly. Like, this is crazy. I love this table. Okay, let's keep going. Okay. This is mind-blowing, that one. Okay.
So here it is visually. This is 4 of the internal startups: Supercharging, Autobidder, and the 2 inference models, one for vehicles and one for bots. The biggest opportunity here is probably Autobidder, and then the computing inference model probably is the second biggest one. Supercharging is attractive. It does depend on how big they can scale this and how many charging stations we need around the world. But all 3 of these are certainly attractive. But if you go to the next slide, Herbert, putting these into perspective, the robotaxi and the bot models are an order of magnitude bigger than those others. this is where the true value of Tesla will come in the future, to the extent they're successful in developing autonomous vehicles and humanoid robots. So you could say these are two big call options on the business. And if either one of these work out for Tesla, the value creation is enormous. And Elon has spoken about this many times during conference calls. And the analysts just kind of ignore his comments. So what I wanted to do is actually put some numbers to it and actually show people what he's talking about.
Okay, we're going to go with that. The thing that you're going to end with, which is really amazing, is the probability that these things will happen and when will they happen, and then the assumptions you're putting into it. Because obviously, just the favorite quote I've been quoting a lot now what's his name told me about this. Brian Feroldi reminded me of this quote that said something like, when you're doing discounted cash flow analysis, it sounds great because it's got a lot of numbers. You got these, spreadsheets. But if it's like the Hubble telescope, if you're just off by 1 millimeter, you're taking a look at an entire new universe.
Right. That's right.
So, this is great. But if you're just off by one assumption or just one, probability is wrong, this could be off. But I love that you put it together this way, because now I know, how to judge it. Okay.
Yep. I was just going to say that the humanoid bots and the robotaxi is a bit of a yes or no. Will it work or won't it work? If you believe that they can make either one of those work, then the value creation is enormous. And is it enormous like 10 trillion, or is it enormous like 30 trillion, or is it enormous like 50 trillion? That doesn't matter. It's
enormous.
Right.
Exactly. It's enormous. So I like the way you put that as well. And then the other businesses, which you're going to teach me about, because I haven't even thought of inference. I didn't think about, Supercharger. Okay. I'm not that excited about it, but Autobidder seems like a big deal. But then compared to these other ones. Okay. Let's keep going. This is really cool. Startups.
Yeah. So I think we covered this chart. If you slide to the next one. So this is a summary then of all of the internal startups on one page. We're going to discuss the different models coming up, but the supercharging business, I think by 2030 could be a $111 billion business, maybe a $200 billion business, depending on your assumptions. And maybe more if Tesla is able to achieve a global standard. So maybe it's a $400 or $500 billion business one day if they can achieve that. Okay. So that's pretty good.
Did you incorporate into this already the partnerships, the oil and gas companies partnering in US, and then just 2 weeks ago, oil and gas company partnering in Europe, and then just recently they announced that even GM, SAIC in China, and now they're going to do Tesla superchargers. It's basically one, apparently in Australia too. So it's like it's global.
Yeah. So I think I've been extremely conservative here. And by the way, this model does not include any hardware sales of the charging stations to anybody else. I'm just looking at the revenue from the chargers themselves.
Okay.
Yeah. Autobidder, this is a really difficult business right now to model because there's such little information known about it, but I've pieced some different things together. I think this is a pretty conservative number. Autobidder also has the potential to be a much larger business than this, particularly as energy scales beyond 2030. So if my Autobidder numbers are aggressive to 2030, okay, so maybe this number then is lower at that point, but it could continue to grow for a decade or two after that. So this is a really interesting business as well. The inference, most of the value comes from EVs rather than bots. And the reason is EVs have more downtime than bots will. And EVs also have a more powerful computer than bots do. But bots make up for it in numbers. So depending on how many bots you think there are, then the bots value could be a lot higher if there's 1 billion bots in the world instead of, only 100 million. So those are both really interesting because of the numbers involved.
Yeah.
But they all pale in comparison to the opportunity with the bots themselves and the robotaxi network.
Okay. So you will explain this, but basically, I think everybody understands superchargers. Autobidder is a software that manages the energy grid, the megapacks. And so we've now heard that in Australia, Tesla is now running their own, energy business there, but they're selling the Autobidder, which is a software that allows them to arbitrage the energy, like to smartly, it's like a stock market, knowing when to buy, when to sell. and then selling
Yes,
it.
it's AI-powered software that optimizes the use of the battery system, when to charge the battery and when to discharge the battery, and trying to maximize the price.
And this is selling
And
it to not only the customers who buy the Megapack factories, but even anyone else.
yeah, they don't actually sell the software. Tesla, as I understand it, runs the Autobidder software for those enterprises that buy the batteries, and
Gotcha.
Tesla
And
takes a cut
they
of the
get the
revenue.
cut. Gotcha. Okay. Love it. And then inference, just to explain to people, because I guarantee you nobody here understands this. This is every single electric vehicle that my Tesla in my garage now has an FSD chip, which is a chip, an computer chip. And we've calculated out that if Tesla themselves wants access to that, if you look at the 5 million cars that are out there, that is chips that has that you can run the computer, and then that's what you mean by kind of distributed, because it's out there.
Mm-hmm.
And then the same thing with the chips that are in the bot. When it's not being used, you can rent it back to either Tesla or other companies who want access to that that warehouse, that database.
That's right. And the way I think about this is Dojo is the system that creates the AI models, supercomputer that creates the AI models that runs thousands of or billions of parameters, trillions perhaps. You need a supercomputer to run that. But once the model is being created, anytime anybody's asking the model, querying the model, you need to run inference. And so why not hand that off to unused computing power, wherever that may be? Yep. So if a bot is sitting idle, if a car is sitting idle, then use those systems.
I did a deep dive with Brian Wang, and he calculated out that he said that a Tesla owner, if you so choose, you can basically rent out anytime your car is not being used to let others access your computer in your car. Mm-hmm. And it could be up to $2,000 per year. It's more likely around $300 a year that I would get as a Tesla car owner, but it could be up to $2,000. So it's significant.
Yeah, we'll see in a second what I have in my model. It's fairly low.
Okay, so let's go.
Yeah. Again, another visual. This shows the scale of energy in autos versus the internal startups. So, yes, Tesla's an auto company today. Fine, call it what you want, but you know what? Change is coming.
Change is coming.
Is it 2026? Is it 2027? Is it 2028? I don't know. And frankly, it doesn't matter, because this company will look very different 5-10 years from now.
And even if all your assumptions are wrong, I love the way you said at the beginning, it's yes or no. If bot and all that is wrong, but look how tiny energy in auto is. Forget this ramp. Let's say you're wrong, but it could easily equal to what we're doing now anyways. Mm-hmm. And either robotaxi or bot, and one of them doesn't work out great, but you've still got, this is huge. Okay.
So let's get into the supercharger model. So, the great development this year is that opening up the network around the world. In North America, they have the North American charging standard. They're also now selling charging systems to companies. So this is a very interesting business with a lot of potential. And Herbert, if you slide to the next page, this is a summary of the model. Again, I'm using Gary Black's EV numbers. So 10 million by 2030. And I'm showing that I'm calculating the number of supercharger connections that you would need. So right now, there's just under 100 vehicles per supercharger. Okay. That's globally in Tesla's network. There's about 51,000 supercharging stations in the world. And so you need about one charger per 100 vehicles. So I'm saying, that's my baseline assumption, is that we'll keep that about the same. Okay. Now, maybe it's really 150, but let's just stick with 100. So by 2030, you need about 500,000 supercharger stations in order to maintain that ratio, so that there's not massive lines of people waiting for their cars to be charged, right? You need, certain capacity. Mm-hmm. So this business scales along with the auto business. But what I have not factored in here is the other EVs from all the other companies that are going to sell them between now and 2030. So double the model. So instead of 111 billion, it's 222. If Tesla sells 20 million in 2030, double it. Double the 111. That's 222. So you're at 333 billion just for that. Okay. So it's a pretty attractive business. It's 300 billion plus business potential by 2030. I went with 111 billion. I was conservative here, I think. If you go to the next page,
Very
I'll show you
conservative.
exactly how I calculated the earnings numbers.
Yeah, I guess before I go there, I'll just say
Yep.
that what happened in the last 3 weeks to a month is that other companies are actually now paying for the supercharger to be built and then actually have like these gas companies, Shell and Esso are now saying, hey, we're going to put the superchargers in our station. So you're no longer just Tesla paying for the superchargers to install. You've got other companies paying for it and giving revenue to Tesla to roll this out. So it's a big deal. What does volts stand for? I just love your acronyms.
We'll see that on the next page. It stands for visualization of optimal limitless superchargers.
Great. Okay.
Scott Walter jokes that I should work for NASA. I come up with great acronyms, and NASA could actually use a person like that. So,
sure.
Yeah.
Volts model. Okay.
Yeah.
Supercharged.
So the basic assumption, I'll just run through these really quickly, that the average charging time is 20 minutes, that the supercharger could then handle 72 charges per day, but I assumed it was only being utilized 20% of the time, right? So the number of charges per day then is only 14. The cost per kilowatt hour to the customer is 25 cents. The average vehicle battery size is 75 kilowatts, and you're charging about 2/3 of the battery each time. So in that case, the revenue per day is $180 per supercharger, or $65,700 per year per charger. Okay. I'd assumed that the operating costs were 70% of revenue. The reason that I said that is because of some guidance that Elon gave a couple of years ago, where they said they're trying to hit gross margins of 30%. Since I didn't have anything better than that, I used his guidance on that. Okay. And he also said that they aim for about 15% operating margin. So again, sorry, a net margin of about 10%. So I came up with a net margin of about 11%. So that's about 7,000 and change per year in profit per supercharger if it's only used 20% of the time. And applying a multiple of 30 to that gets me to a value per supercharger of 221,000. Right. So I think I've been pretty conservative here.
It's too conservative.
Both in the number of charges that Tesla will have and in the utilization of them.
Yeah. And the margin, because the 30% was back then, but now, you know how they've completely changed how they build these things and how they deploy them. They're now like built in a factory, and then they're just plopped in at this point. And then what happens when you put solar panels? Basically, the energy is free, and then it can actually flip. Each of these superchargers with the solar panels can actually be a utility selling the energy that's not being sold here.
That's right.
So anyways, okay.
Yep. So the next page shows kind of its scale and what the value to Tesla is.
Okay.
So 1 million superchargers would be a $220 billion business. If there, will there be 5 million in the world? In that case, this is $1 trillion business. Now, what we don't know is for the superchargers that Tesla is selling to BP and others, does Tesla get a cut of that revenue, or is BP keeping all of that? We don't know the terms of those deals yet.
We don't. But it would be crazy if they did not get a transaction fee ongoing. That's crazy. That just, I mean, it's the complaint people have is that, Elon's here to, for the good of humanity and forget Tesla shareholders. And so he's just going to give it away for free. That's a possibility. I'm not going to put that out, but.
Yep. So there's the tweet from a couple of years ago where Elon said 30% gross margins, 10% profitability. So I went with that, and you're right. It's probably higher. Yeah. So that's that model, and here's just a visualization of it. I think we've covered everything there.
Okay.
The next one is energy. So this is, again, from Investor Day. And at the bottom there, on the bottom left, it says 24 terawatts. So this is sort of the amount of battery storage that Tesla envisions putting out in the world. And so that's why I feel that getting to 1 terawatt hour of energy deployment by 2030, it would still give Tesla 24 years of deploying that. If you turn to the next page, it's a summary of the model. And I think we've discussed most of this. If you go to the next page, maybe we can go through the detail on how I built it. So each megapack system, the big ones now, the 2XL has 3.9 megawatt hours of energy storage. And for this, to build this model, and by the way, this is still kind of a work in progress, but I think these numbers are pretty conservative. I assumed that 100% of the battery every day was used and made available to Autobidder. In reality, a lot of these batteries are there for, some kind of system outage or something like that. So there may be limits placed on these batteries. But just to look at sort of the opportunity, I assumed 100%. I assumed the difference between the buy and the sell prices was 25 cents per kilowatt hour. And I backed into that because of a tweet, a post that Rohan Ma from Tesla Energy had a couple months ago. And I'm sorry if it's a little fuzzy on the screen, but they now have about 7 gigawatt hours of battery storage under their Autobidder portfolio. And he said that they've made about $330 million in trading profit to early storage investors. I did some calculations and I backed into that 25 cent number. That's basically the difference in the buy and sell price that they would have needed to earn on, a business that was scaling to 7 gigawatt hours to earn 320 million since about 2020. That's where I got that from. Some people I've talked to said the number could be higher. Some people think it could be lower. It depends. It depends on the situation. We're hearing some information out of Australia where a company there, their results have been phenomenal. They're looking at about a 3-year payback on their battery storage investment. I have a 9-year payback in my model. Okay. And their contract was interesting with Tesla. I don't know what these contracts look like, but I'm assuming Tesla takes about 12.5% of this revenue. And for Tesla, the gross profit per megapack, just on Autobidder, is about $200,000 a year.
Yeah. Okay.
Or the value to Tesla of megapack, assuming a 65% margin because it's software, is about $867,000 per megapack. So depending on how much storage Tesla can put out there over time, the value of Autobidder could be pretty phenomenal. At 1 terawatt hours of storage deployed, that's a $222 billion business. And you get to 24 terawatt hours eventually. Multiply that number by 24.
Yeah. Yeah, that's
again
too much.
This business right now, the model is wide enough to drive a bus through it. So I'm cautious about sort of putting this out there, but it's something to at least work on and refine over time. And I'm confident that I'm reasonably conservative with these numbers in terms of the underlying model itself. Maybe my assumptions for how Tesla scales this business to 2030 are too aggressive. And that's fine. And maybe it takes them longer to get to 1 terawatt hours of storage sales per year.
Okay, what I'm confused is I can see that this is megapack sales and you got the profit per megapack. Where's the Autobidder part of it?
That this is just looking at Autobidder. So I'm not even counting the sales of the
actual
itself.
megapack. Gotcha.
Yeah,
okay, so this
separate.
Is like Autobidder per year service on top of the megapack sale that already occurred. This is just on top of it. Oh my God.
Yeah.
Wow.
You can see there it's about 3.5% of the original purchase price per year. So think of it as like a dividend, right? They sold the megapack for 1.3 million and they're getting 3.5% a year on top of that every year for 20 years.
Yep.
Not a bad
oftentimes, that's like the way that, MRI machines, CT scanners, these kinds of things are sold. The services is always more than the actual original gross profit.
Yep. This is a visualization, again, at 10 terawatt hours. That's a $2.2 trillion business.
Yep.
Okay, this is the distributed inference for EVs. Again, using Gary Black's estimates till 2030. I assume that by then, 80% of the vehicles of the fleet of about 49 million could be used or would be used for this. And that gets me to a value of about 300 billion for this part of the business. And the next page calculates or shows those details behind the model. Yep. This is the tweet.
I mean, okay,
sorry.
so let's just pause for a second here. So obviously, this is a model that, okay, what evidence do we have that they would do this? So, just today, Elon tweeted out, Andrei Karpathy tweeted out, I've been thinking a lot about centralized versus decentralized. And then Elon said same. Mm-hmm. And this is the potential where the demand for chips is so high, the demand for compute power is so much. Why wouldn't they take advantage of the distributed chips that are in our electric vehicles today? And then you're saying, look how many cars are out there, and this is how much. If 80% participate in this thing, this is how much money that Tesla could sell to other companies to have access to that compute power.
That's right. On NVIDIA's conference call last night, they talked about how their chips are being used for inference. Yep. But everybody complains how expensive NVIDIA's chips are. Yep. So if you could do it in a decentralized way for cheaper, then you would. And that's probably why there's such an interest in pursuing this as an alternative to using NVIDIA.
Okay. So you cover this?
Yep. Yeah. So again, the top right is Elon's tweet where he talked about this. And from there, I attempted to build a model, took a look at the processing power of the car Hardware 4, assuming that 25% of that processing power could be used, that you've got 15 hours of downtime per day per Elon's tweet, and the market price per top hour, which is 1/10 of a cent. I assumed that Tesla would take about 50% of the revenue. So the EV owner would get about $400 a year, and Tesla would take about $400 a year.
So I forgot about this. So he just tweeted this month, a few weeks ago. He said, provided our vehicle AI computer is able to run the model, Tesla will probably have the most amount of true usable inference compute on Earth. Even in a robotaxi future, the car is only going to be used for 1/3 of the hours per week, leaving 2/3 that's available sitting there. Distributed inference, just like Saidi, what he's talking about is this project to be able to, you need computer power to kind of to look at looking for alien life. And then everybody just said, well, I've got a computer on my desktop, I'll let you have access to it. And then now you've got, the ability to power using all the computers out there, whoever participated, giving them the power. So this is real. This is real. This is Elon saying this.
It's real in terms of an opportunity. It's not real yet in terms of a business or revenue.
Yeah, for sure.
So it is, granted, it's a bit of a stab in the dark to try to come up with some numbers. This is now the one for bots. Yeah. So
okay.
here's back
to the bots.
Yeah. So bots is also interesting, and I'm assuming about 50 million bots in service by 2030, and that creates a business value potential of about 56 billion.
You got 30 million here.
Yeah.
Oh, 50 cumulative deployed bots. Gotcha. Yeah. Wow. So that's a lot of bots.
My bot assumptions are they make 10 this year.
Yep.
Probably more. 1,000 next year, 10,000, 100,000, a million. And then from there.
When you put it this way, it makes sense, doesn't it? If they can make easily 100,000 even by next year, really, if you think about it. But okay, you're being conservative, 2026, and then 1 million in 2027. That's pretty straightforward. I mean, I don't think anybody here would say you can't make 1 million bots. I mean, we're making how many cars right now, and this is so many years away, and then it just skyrockets, and now it makes sense. Okay, I like it. And we're talking 5 million, 15 million, and 30 million. Yeah.
Yeah,
I love it.
And I asked Scott Walter for his numbers for production for bots. He gave me a number. I won't share what it is, but it's much higher than what I have here.
Thank you.
So don't believe me, believe Scott. And if you believe Scott, then it's even higher than this.
Yeah, I mean, as we know, Tesla is built for scale, manufacturing. So this is not unbelievable that they can't create a factory to produce millions of, I mean, if they can produce 20 million cars by 2030, why couldn't they? Because bots is much easier, much easier, like trivial to create.
Yeah.
And then, by the way, bots making bots. That's the thing that people forget, is that, if you got bots making bots, it's like game over. You're talking about, 3 shifts, 24/7, never stopping, and it's just automated, but also the bots just doing this very fast. By that point, their speed will be four times faster than a human can move.
Yeah. I don't know if you remember the old saying or the story about, the king asks the guy, does he want to be paid a certain amount or
penny a day, double,
or one, like doubling every spot on the chessboard. By the time you get to the end, it's all the atoms in the known universe or something, right? So if a bot can make itself, and then those 2 bots can make itself, you get a doubling every day.
Yeah.
By the end of the year, we're talking more bots than
you can.
Right, it's ridiculous. So the ability to scale here, I think, potentially is there, assuming you've got enough material and the supply chains in place to support it. So this is the bot model. The computing power of the bot's a little bit lower. The downtime is much lower, 4 hours a day. And that's one of the reasons that this is not as attractive, but it could be made up by numbers. So if you get to 1 billion bots, then this is a $1.1 trillion opportunity. And if we're talking about 10 billion bots at some point, then you're looking at a $10 trillion opportunity in inference. So I can see why they're excited about this.
And just to clarify, okay, the bot, you said at the beginning how much the bot itself going to be sold and how much it's going to represent for the market value for Tesla. Yep. This is in addition to the bot. This is like when the bot is just standing there and you want to access the brain, the computer and the brain to be able to use for other AI services. This is extra profit and revenue for Tesla.
And in my opinion, they're looking at this as through the lens of minimizing the cost to XAI, not necessarily through the lens of, hey, here's another revenue stream for EV owners.
Tesla. Okay,
it's an extra $300, $400 a year. Great. But it's really all about minimizing the cost to XAI.
No, but when you can pay EV owners money for letting them have access to the chip in there, which doesn't cost you anything to spend, you flip the business model of EV ownership. Now it's like, I'm going to be making $1,000 extra per year, which can cover my insurance. I can reduce the price of my car. If I'm paying $40,000 for a car and I have it for 10 years, that's $10,000. That's a third. It's significant. It's a significant flip of the business model.
For an individual EV owner, absolutely. It's another reason. Yep.
Okay, so what's this?
So we've covered this in our first video, but this is the autonomous vehicle model, the Cern model. Again, I'm using Gary Black's numbers out to 2030. That gets you to a potential autonomous fleet size of 42 million vehicles if it starts to scale in 2025. So I'm saying it's still a year or 2 out. First year, you get to 1 million vehicles, and then more vehicles are added to the fleet. And you can see how quickly then the value to Tesla grows as those vehicles are added to the fleet. This does not include licensing FSD to other companies. So this is just Tesla's vehicles. If Tesla solves autonomy, it's a virtual certainty that other OEMs license the technology. In my opinion, because there's no one else that's doing what Tesla is doing to solve autonomy. I think we've seen that recently with news about Cruise, etc. So anyway, this shows how quickly the value to Tesla ramps up. In the first year, it's $800 some billion, and then $5 trillion the next year, and so on.
You're talking trillion. This is trillions here.
This is trillion.
This is trillions.
That's right. So the next page shows the model, which we have discussed in detail in the previous. I don't know that we need to spend much time on this, but the model is greatly influenced by the base fare, the fare per mile, the utilization rate, and Tesla's take rate. And if you recall, I looked at this through the lens of both Tesla and the fleet operator, and I designed my model to make sure it worked for both. Since our first video, I have built some models actually for some companies that are looking to create autonomous robotaxi fleets. So I've actually built way more complicated, complex, and detailed models than this. For this purpose, I stuck with a simple one. But I can tell you I've looked at this almost every which way but Sunday, and it is an incredibly profitable opportunity at scale.
So I will put a link in the description to that video that you and I did where you walked through very detailed the assumptions of the robotaxi network model and also the bot model. And then what you've done differently than everyone else is not only the value to Tesla, but also the value to the partners, the shepherds that's going to manage these robotaxi on behalf of Tesla if they can have a viable business. And you made sure that that helps you guard kind of the value that is going to come to Tesla because they do need to pay these other shepherds.
Definitely an important part of the business model. The other thing worth mentioning just on the previous screen, you tasked me with taking a look at what's the potential revenue from entertainment or advertising.
Right.
And
you added it.
Even if they only get 25 cents per trip, that's an extra $3,500 a year of revenue. That seems low. The opportunity there actually is probably quite a bit bigger.
Very high. 25 cents a trip for entertainment. Yeah. It's going to be huge.
Yeah.
Okay, I love it. And then this is just completion of that, the profit.
Yeah, this is Tesla's net margin under this particular set of assumptions was 17%, and the fleet owner was 29%, given the assumptions here. This is, again, a very simple one. And here's the visual. Depending on the number of vehicles in the fleet, shows the value to Tesla. So if there is, 50 million, that's a $15 trillion value. If it scales up to 100 million worldwide, then it's a $31 trillion value to Tesla.
Okay, let's do the bots. Same thing. You covered the bot as well.
We've covered this before. No real change here. Same model.
Okay. And then the bots model.
Here's the bots model. Same thing. Yep. No real change here. And the key thing with this is the bots are taxed heavily. The government makes more money on the bots than Tesla does in profit. And I think that ultimately will be important.
Yeah. And so again, we covered this in a previous video, but I love that you added the tax that the government can get, cities can get, and then that just really it's a conservative. If you didn't add that, then, but even if you added that, even though, like I said, they make more than Tesla, the numbers are nutty for Tesla.
The value to Tesla's, the valuation bumped to Tesla for every bot sold is about $350,000. Okay, even if it's half of that, even if it's, under 200,000, it's still significant. A significant opportunity. It changes the company dramatically. Yeah.
Yes. Okay, so again, same thing.
And that's only with 100 million bots in service. So the capacity here for bots is 1 billion, maybe 10 billion. If it's 1 billion, add an extra zero. If it's 10 billion, add 2 zeros onto that.
Yeah, Elon has said that he can easily see 1 bot for every human. In fact, even 2 bots per every human in the future. Yeah. There's 8 billion humans. Yeah.
Yeah. At that scale, at the billion plus scale, the revenue probably is a lot less, but even so, the numbers are absolutely nutty.
Okay, this so here you've got everything. Okay, let's do this. Yeah.
Everything together, the 5 internal startups plus energy storage plus autos, 2030, I get to a valuation of about $34 trillion. The key drivers of this are bots and autonomous vehicles. The other businesses are exciting, but they pale in comparison to the 2 main drivers of the business. The AI-powered robots on wheels and with feet. Yeah.
These guys right here. These guys.
Yeah. Now, there's some probability that this will or won't happen. So if you take a look at the next page, I took a stab at saying, okay, let's knock this down. Let's assign a probability. So let's work backwards from autos on the far right. Let's say autos only achieve 60% of what I modeled. Okay, so we'll knock it down. That means supercharging on the far left is only 60%. You don't need as many charging stations if autos is not doing as well. Back over on the right, if energy storage, let's say only 60% of my targets. And then Autobidder, only 25%. I really knocked that one back. And then in the middle, the bots and the humanoid robots, 10%, and same thing with the AI inference.
Just 10% probability. Yeah.
10% probability that those happen. The value of Tesla in 2030 is a $4 trillion business.
Yeah.
So, maybe there are folks out there that would put 0% in some of these categories, and that's fine. But that's where the opportunity is. If Tesla can execute on this and deliver even a part of what these models show is potential, it gets really interesting for Tesla investors. But they have to execute. They do have to solve a lot of problems to get there. Right? It's certainly by no means guaranteed, but it's a very interesting future, and it would totally change the shape of the company. And that's what this chart shows in another way is, it's hard to find the auto business.
That's not here. Yeah. Right. By 2030, this is a bot company. This is a robo-taxi company, and energy is going to be equivalent to auto, but they're small. And then, like I said to you earlier, you don't even put AI in here. This could all be like, if you put AI, I think that AI is going to be like, you and I talked a little bit about this at the beginning of this call. So bot represents blue collar workers. AI represents, the white collar workers, although AI is going to be part of XAI. So I think maybe I'll walk back and say that you're right. This does not belong in Tesla.
Yeah, if Tesla makes an investment in XAI, which appears today might be under consideration, that would be interesting. The other thing, though, that will happen, I think, as bots get put into service and robotaxis, it's going to massively drive down the cost of labor and transportation. So it is entirely possible that the revenue numbers actually are quite a bit lower as those costs come down. But still, even if they are lower, it's an incredible opportunity. And of course, what we know too is when you do drive costs down, you get more of that activity. So if we drive labor down to $5 an hour,
it's going to be a wash.
We're going to get a lot of it. It's a wash.
Yeah. I think even Elon has said that that's the case. Like, it's like, yeah, what a world we're going to be in. Cern, thank you very much for doing the work. Like I said, that few people have actually done the research and they actually put numbers in the table. That takes you guts. That's guts that you did that, courage to do this. You said already that it's wrong. But wrong. You give the information there. People can change the assumptions. You can put the I love the slide where you put probabilities, because that's really the critical part. So even if you don't believe what you just said, if the viewer doesn't believe what you said, you've got the data here. You can try to play it around, but you put some numbers in. So that gives us at least the kind of relative comparison of what could happen.
The other way I would think about it is that if you buy Tesla today, you're buying an auto company and an energy company with a call option on autonomy and a call option on robots. And those call options today are largely free. Right. So
because it's not built in. Yeah.
It's not, in my opinion, it's not really built in. Now, some people may argue that Tesla wouldn't trade at 60 times earnings if it wasn't built in to some degree. But my modeling showed that energy and autos support the valuation over time as those businesses grow. So nice. In my opinion, you could say, well, energy and auto, that's what you're paying for today. That's built in. Fine. They're going to grow, whatever that is, 10 million in 2030 or 20 million vehicles, whatever you want to assume, it will grow. But you're getting two call options on two massive opportunities. And that makes it very interesting.
And it's massive opportunities. And I love that you showed this, the comparison. Wonderful. Thank you so much, Cern. Again, I'll put the link to the previous interview that we did if you want to dive closer to the bot model and the robotaxi model. And now you've intruded more. And as we saw the one slide at the beginning, you've got more models to do. These three that you chose were good, but they're not like Supercharger is great that you did that. But you need to do Dojo as a service. You need to do some AI thing. You need to do you go down that list. So we'll come back.
Sounds good. You know that I'll definitely be thinking about them.
Well, I'm asking you to, so I'm just kidding. Thank you so much, Cern, for spending time with me. Appreciate it. Thanks, everybody.
Thank you, Herbert.
Follow Cern on X at Cern Basher, and he's an absolute, he comes with real data. Thanks, everybody. Bye-bye.